How would you guys like to learn about 10 companies that pay a 10% dividend or higher? Well, if you stick around to the end of today's video, I'll share that information along with one bonus company that makes around 8% dividend. Those of you who don't know me, my name is Adam Kahn, and I'm the Rational Investor. Today is Thursday, September 28th. I hope you're all doing well. Before I get any further into the video, do me a favor, hit that thumbs up button, like, subscribe, chime in. It really helps the information get out there, and it helps the algorithm for YouTube's system, so it gets my information out a bit and it really helps the channel. I would appreciate that from you guys. And feel free to make some comments. Tell me what you think. Tell me some other companies that you guys might know of that also have high dividends that you like. Um, I love this stuff, so I like to learn as well. So today I'm just going to discuss some companies that have high dividend yields. Keep in mind that there is risk to them. These are no guarantees or anything else. Some of them have been around a long time, so I'm comfortable with them. Some of them I even make fun of on some other videos. At the same time, I think it's good to have a tiny bit in your portfolio, get that return coming in, which is kind of nice. I like to have those dividends coming in. Some pay monthly, some pay quarterly, some pay annually. I'll go over a little bit of what I know about each of them, but I'm not a financial planner. You guys need to do your own research. You guys need to make your own financial decisions in what you guys do. I'm just sharing the information that I have learned over the years, and the stuff that I like. So take it with a grain of salt. Don't stress. Don't put all your money into any of it. I would highly recommend against that. But I like to have a small percentage of my portfolio getting a nice return from dividends. So that being said, I'll go into them. These are in absolutely no order. In fact, it's probably primarily alphabetical order, just because that's the way I pulled them up. So it's not like I'm ranking one or the other. In fact, some of the ones at the end of the list are some of the ones I like best, and the last one, which will actually be the 11th, is one that I really like, but it's got a good amount of risk on it. So the first one I have is, now these are all based on yesterday's closing. Sorry, I tend to chat a lot. So the ticker symbol is BXMT and it's Blackstone Mortgage. It was paying 11.3% dividend as of yesterday. These dividends aren't really guaranteed, same with the others, but they've been pretty consistent for a long time. It is the Blackstone that you hear about. They're a big corporation. They've been around a while. They own a lot of things. Um, so I'm pretty comfortable with them. Now, a few of the companies that I have on here, they are engaged in real estate and mortgage. So I'd be a little cautious about buying the same amounts of all of them if you went to go get all of them, because you'd be a little bit heavy into the real estate and mortgage. And if one does bad, odds are the others don't do so well as well. They'll have different managers and they'll be run a little bit differently, but they are in the real estate space. I know there's been a lot of news about the Fed raising rates and everything else, but I really stick with primarily dollar cost averaging and putting a small enough number in anything that I'm not too worried if I lose my money that it's not going to make or break me. Um, and I don't worry about the noise of the news, because there are lots of times things are scary and sound like things are going to be really bad in the future. Maybe they will, maybe they won't. Nobody can really predict that. There are a ton of gloom and doomers out there, and I try to ignore them because the information sounds great, but they don't know, and who knows? And I get that the data points to all these things, and even Jay Powell is saying there'll be pain and whatever else, and maybe there will be. But my philosophy is I want to invest good times, bad times, average into it throughout the time, and just hope that I'm still having my job, making my income, keeping up with my bills, and try to make sure that all that information is just noise. Anyway, that's a long caveat. Let me get into number two, which I just found recently, but I really like because it spreads into a different sector. And the ticker symbol is CALM, CALM, and it's Cal-Maine Foods. They're pretty much an egg supplier, and they if you look up the company information, they they package and ship eggs of big egg companies that you've probably heard of. I like that it gets me into a different space versus a lot of the real estate stuff. And right now they were paying about a 10.5% dividend, just a little bit lower than that. The next one I have on my list is CLM, which is Cornerstone Strategic Investments. They're a big conglomerate of a bunch of different things. They pay an 18% dividend right now, which tells me they're taking on tons of risk. Most of the time, when you see super high dividends like that, it's not sustainable. So I'd be cautious. And if you put some money into it, I would make sure, again, just my opinion, you guys need to make your own decisions, that it's a really limited amount and it's at risk. I find when companies' dividends start to get outrageously high, there's a reason behind it. Um, the next one I like is not a 10% dividend, but I like the company and again the sector that they're in. The ticker symbol is DVN and it's Devon Energy, and just like the name sounds, they're in the energy business. Um, they're paying a 7% dividend right now, and they've been around a long time, so I'm pretty comfortable with the company, and I love the fact that it's paying a 7% dividend. That's a really nice yield from an energy stock, and it's not like some of the others. They're diversified into a few things, and anyway, Devon's one I really like. Here's another one that I picked on, but I do really like the company. What I don't like about it is it seems like a lot of the YouTube channels suggest it, and some of them have even implied, putting your entire retirement in it and living off the dividend. Uh, Again, you guys need to make your own decisions, but to me, putting all your money in anything seems super risky and not anything I would want to do. I do have a small amount of it, but I keep it small just because anything paying a 10% dividend, I feel like no matter what the salespeople tell me, there's some risk to it that either they don't understand or I don't understand because nobody can really guarantee that type of return. The ticker symbol is JEPI, and it's the JP Morgan ETF. They use a call selling strategy. I haven't looked deep enough to know what companies or indices they're buying, but essentially what they do is they get long and underlying equity. Maybe they're buying the S&P futures or something similar, and then they sell calls against it to generate that 10% return that they try to get around. It's a decent strategy. I just worry about the downside risk on it. I actually had somebody make a comment in the comment section that they use ELNs to mitigate the risk. And when I researched the ELNs, what I read was the intention was they were created to protect the equity of an investment, but they've gotten so complex over the years, it's a little bit confusing as to whether they really do that. Part of the reason that they mentioned that was in the video. I said, if you're using a call selling strategy, the risk is you can only lose because if the underlying drops, sure, you have the calls that you've sold against it, but the value of the investment is going to be dropping along the way. Whatever the ELNs are protecting them to some degree, but I'm quite sure after the research I did, there is some risk that it's not guaranteed. And I'm sure in all the prospectuses it warns you that nothing's guaranteed. Um, the next one on my list, the ticker symbol is NLY, and it's Annaly Capital Management, and they are in the mortgage business. They've been around a while, and they have a nice big market cap. They're paying a 13.4 dividend as of yesterday, which is phenomenal, and they're actually down a little bit more today. I think those funds are down because mortgage rates have gone up in the mortgage world, things have slowed down. There's probably a little bit more risk in them than there used to be, but again, if I take a small enough percentage to try to get 13% return, as long as they continue to pay that, I'm thrilled with it. And I try to have little enough in there that if they go out of business, it's not going to kill me or ruin my overall portfolio. So this is the second one that's going to be under 10%, and the ticker symbol is OHI, and it's Omega Healthcare Investors. They're paying about an 8% dividend right now. They're also in the real estate business, but what I like about them, they're specific to healthcare. And what they do, from what I understand, is they buy a property, they probably buy the land as well. They open up a healthcare uh, for a retirement home, and then they handle the mortgage and the lease to somebody who does that directly with them. So even though they're in real estate business, they are a little bit diversified, just a little bit, because they're leasing out to their own investors. Now, maybe I'm wrong on it again. Do your own research, chime in if you know something I don't. But that's my understanding of what they do. So I feel a little bit more secure in it just because I think that's probably a pretty good space to be in. I also know they've been around a really long time. One of the ones that I found that I really like a lot, the ticker symbol is PFFA, and it's the ETFIS Series Trust. And what they deal in is preferred stock, which oftentimes pays a high dividend, high yields, things like that. And they're paying approximately a 10% dividend right now. What I like about them is they pay monthly. And for the money that I put in the high dividend type stuff, I actually have a larger position in it than the others, primarily because of the monthly pay that comes in. I really like that. You know, every month I get a small amount of money from them. It's more satisfying than once a quarter or however often some of the others do. And I like having that monthly income. I think of it as being able to pay bills off of. And I think they're pretty well managed and they're a pretty big company. Next one on my list is RC Ready Capital Corporation, another one that's in the real estate finance business. They're paying about a 13.9% dividend right now, and same as the other one. I'm guessing it's gone a little bit higher because they're all seeing some risk in the real estate and mortgage world. And, you know, if you haven't watched some of my other videos, I do mortgages as well. So I can tell you that industry has slowed down dramatically. So I don't know exactly how these ones are engaged in the industry. Um, that's quite a return for it. But at least from what I'm seeing on our end, things are a little bit slower. So maybe those stocks have dropped because they see that in the industry and they need to get better return because of that risk. Um, and number 10, before I go into the bonus one, is STWD, which is Starwood Property Trust. And similar, they're a REIT as well, so they invest in real estate and everything. But most of you have probably heard of them. They deal in the Starwood properties. So they've got hotel chains and motel chains and things like that. They have some other investments as well, but that's their main source of revenue. And right now they're paying approximately 10% as well. So the one other that I have, which is paying approximately 20% return right now, is IEP, which is Icon Enterprise. Now, that is the investor, Carl, I think, Icon. It invests in energy, investments, auto, food, packaging. They do real estate. And most of it is they get their return from investing in subsidiaries of their own company. The risk with it is, I want to say Carl Icahn owns like 80% of the stock out there, so a huge percentage of all the float is his. And they've recently been under attack by a short seller who sees some problems in the company, and the stock price has dropped dramatically, which is why it's paying such a high return. Now, I don't know if he's paying huge dividends to suck out the equity because he sees the same problems. I don't know if things are just fine and they're able to make those dividend payments. The research I do shows like they took a loss last quarter. So I don't know how deep their pockets are to continue to pay the dividends as the stock continues to fall. But I, I'll take the risk again with a small percentage. It pays a high dividend. It's dropped dramatically. They pay like $1 a quarter, and the stock's trading at $20 a share. So I'll go on his side and hope that the short seller doesn't win out. Hopefully, the guy blowing the leaves in the background isn't too loud. And I don't know. I assume you hear it. Maybe you don't. Again, do me a favor, thumbs up, like, subscribe. The other thing is, if you guys do need a financial planner, my brother is one. While I'm not, I am happy to share his information. I'm not here to tout him. That wasn't the goal or anything else. But he's conservative. He's good at what he does. Like, feel free to contact me. I'll be happy to share his information. Um, but yeah, that's just a shout out. He wasn't looking for any of that, nor is he really looking to to do any of that. Anyway, thumbs up, like, subscribe. Tell me if you guys have a high dividend stock you really like. There are a bunch of others that I didn't mention that I like as well. So have a great day, and maybe I'll talk to you tomorrow.